Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero, and we have a great episode for you today. Arjun Sethi, general partner at Tribe Capital and co-CEO of Kraken Exchange, one of the world's largest and oldest Bitcoin and crypto exchanges. He is our guest. We're going to talk with Arjun about what they're seeing in the market, what they're excited for going forward in this new sort of regulatory regime, and what his thoughts are on the future of crypto. We'll check with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk about markets and this whole situation with tariffs. It's going to be a very interesting discussion with Beimnet as well. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into it. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
What's going on? How you doing?
No, thanks for having me.
Thanks for having me. I'm sorry. I gotta.
I mean, it's an exciting time, right? Today is, according to the president, Liberation Day. And I suppose what he means is liberating the United States from unfair, imbalanced trade tariff policies. What it means is, and we're recording on Wednesday, what is it, April 2nd?
Yeah.
At around noon. And I guess at the end of, after the markets close, he will announce reciprocal tariffs on a bunch of countries that themselves tariff us. That's been sort of driving, frenetic movement around what he will do and won't do and blah, 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 has sort of been the market dynamic we've been in for weeks now. What does it feel like on today to you in this regard?
Today you're seeing a little bit of a relief rally going into the announcements. Not sure if it's warranted. I think the level of uncertainty after today is still going to remain high, partially because we don't know what the retaliations are going to look like, and we don't know what the responses to the retaliations are going to look like. And so I'm in the camp that, folks will leave today's events with more questions than answers. And there's still a debate as to how they're going to implement it and, how do you measure the non-tariff trade barriers. And so, I think you get a little bit of a relief rally because, the uncertainty about today's events will go away. However, I think that, rebound and risk will probably be short-lived because the market will start focusing on the responses as well as kind of the deteriorating sentiment about the U.S. economy.
Right.
And so this just kind of seems like a chapter that is going to close and that should give folks a little relief. But ultimately, the next, 3 to 6 months, 6 months to a year, I'm still very cautious on. And it's partially a function of the tariffs, but also just a function of where we are in the business cycle. On Sunday night, Goldman produced their recession forecast for the year, and they upped their probability of recession from 25% to 35% which is a meaningful jump. There's a bunch of street side economists that are anywhere from 30 to 50%. We had a famous bond investor from Double Line, Jeffrey Gundlach, one of the more notable fixed income voices out there. He put his probability at 60%. Wow. And even the Fed during the last FOMC, they downgraded their forecast for growth. If you look at things like Atlanta GDP forecasts, it's moved a lot lower for Q2. And there's just a string of headlines that continue to reinforce that the outlook 6 to 12 months from now is, worse than people think. I'll give you one anecdote, which is, the New York Fed published a report about the impact that student loans are going to have on credit scores. Basically, there's going to be 9 million people in the U.S. that are going to have their credit scores, move down anywhere from 100 to 150 points because of the lack of repayment hitting their credit scores. This is just has to do with
is this folks who didn't pay because they were getting relief, or they thought they might, or they just hadn't been paying?
I believe the Biden administration had put a freeze on credit score stuff being posted.
I see.
If you didn't pay once the repayment window opened up again. And so, think about that. 9 million people that probably haven't purchased a home yet, that are getting their credit score, negatively impacted, that has real consequences to the housing market.
And less borrowing power
less
in general.
borrowing power, right?
Less buying power.
All of the above, right? You couple that with, the labor market dynamics, where we still haven't seen the layoffs hit the data yet, but as far as we know, like, there's been hundreds of thousands of job cuts that have been announced between the federal government and the private sector, and that hasn't hit the data yet, but it will.
Yeah.
And we know that, the private market hiring dynamics weren't even that strong over the past year. They only accounted for like 25% of the hiring or something.
Yeah, it's mostly like what, federal, state, and local
federal,
government?
state, and local. And so if you're telling me the government's been laying off a ton of people, like, I don't think the private market is necessarily going to absorb all of that labor. And so you've got a dynamic where prices are going to remain elevated because of tariffs. People are losing their jobs. CEOs and CFOs are feeling as uncertain as ever about, the business climate. And you have, just a general deterioration in consumer sentiment. And so you've seen that in the Michigan consumer sentiment data, the Conference Board, consumer sentiment data. People feel really bad. People feel bad about their job outlook, their wage outlook. People, feel bad about the market. And so that has an impact on spending. And then you throw in things like tourism, for example, right? One of the stats we've been highlighting here is, I think Canadian flights to the U.S. In terms of plane bookings for the summer are down 70% year over year. I'm guessing European travel to the U.S. is also going to be down, pretty meaningfully. And so that's going to be a hit on the economy. And so there's a robust set of factors that are going to weigh on the U.S. And I think it's really hard for investors to ignore that, particularly once you've gotten this kind of tariff news kind of removed from the market. People will be like, okay, that's
start focusing on other things. And you're saying there are a lot of other things that raise questions here. Yeah.
And I mean, you look no further than corporate America, right? Corporate America is very good at estimating and providing outlooks about, their earnings, right? And what consumers are doing. Like, they're literally analyzing all the data you can possibly think of, foot traffic in stores, clicks on certain ads, like, et cetera. And the message from corporate America has not been good, right? Walmart CEO, Lululemon sales, Nike, right? What do people spend money on when they feel good? Yoga pants and sneakers.
I know. What was that headline of something like the Lululemon guys said that there was a troubling trend, and the trend was people are buying secondhand Lululemon.
Secondhand clothing in general.
Secondhand clothing. Yeah. At increased levels.
And so
doesn't bode well for sales.
Correct.
Yeah.
Right. There's this, the sentiment shift leads to changes in behavior.
Yeah.
And, in classic economics, it's like substitute goods, right? And so, like, if I can't get a Coke, like, I'm going to go to Pepsi. Or if this thing is $2, I'm going to go to the thing that's $1. If I'm not shopping at Lululemon, maybe I'm shopping at Family Dollar.
Yeah.
Right? And so you're seeing these dynamics kind of happen. And I think that's really the core theme of 2025.
Interesting. Well, that's a lot to think about. And
Absolutely.
It's funny because so much has changed. You have to wonder what I was at an event in Washington on Monday, the Cherry Blossom Summit, and which is a private conference that Senator Bill Hagerty puts on. And Treasury Secretary Scott Bessent was there, and Senator Hagerty interviewed Bessent. And he started with this joke of like, so he comes up on stage and he's like, so how's everyone feeling about the market, right? And there's jokes.
So good.
There's like, this is a very private event,
Yeah.
in that it's like, there's no press or whatever, and it's and he said he was getting some text messages from his friends, like in the market, with stuff that was like ranging from like questions to, he's joking, I'm assuming, to dangerous stuff he might have to tell the Secret Service about. But then he basically doubled down on, like, he said that markets were focused on micro moves and stuff. So again, like the president, also downplaying the market. And you just have to wonder, like, at what level, like take like an SPX drawdown, at what level do they have to, how much leeway do they think they have? Like, how many months of market stuff can they bear while they try to do this detox that they say the economy needs?
I mean, you have to give it a real go, right? And a 10%, 12% correction in the S&P isn't really a real go at fixing the structural problems. And so I think they've got a lot more capacity for pain.
Yeah.
Because, the S&P was up 20+% last year.
Right.
So people are nervous about a 10, 15% correction. Like, guys, come on. Like, the market's ripped. People are...
Take a little breather, guys.
Take a little breather. And the people that own the assets, I mean, those are the people sitting on 3% mortgages.
Yeah.
Those are the people that have been invested in the market for the past, since the great financial crisis, right? And so there is, this is the wealthiest country on the planet by a mile. And so, they can stomach the pain. And one of the things I do worry about in terms of Bessent is he's very focused on, cutting the deficit by a measured amount every year, like call it $300 to $500 billion. Right. But there's rumors now that tax receipts are actually going to fall short by a couple $100 billion to begin with.
Yeah.
And so if you're telling me he wants to cut spending by $300 billion, maybe a bit more this year, and tax receipts are going to be $300 billion lower than they had expected. Well, then you're talking about $600 billion worth of cutting you need to do to get the deficit to where you want it to be.
That's right. If you just do the amount, then you end up flat, basically.
So you really you need to continue to push the envelope if you're actually trying to accomplish your goals, and it's going to be more painful than people think.
Yeah. I think that's a key takeaway that the market has digested. It doesn't necessarily mean things go a lot lower, but it does make you wonder whether you should be buying risk assets right now. Yeah. Because they're not yet anywhere close, it seems, in their messaging to saying, that tariffs have worked.
Yeah.
Right? Or they still have a lot more to do.
Just think about the idea.
They've only been in office for 2.5 months.
Yeah, but just think about the idea of a factory that needs to move from offshore to onshore to accommodate these tariffs. It takes years to build a factory. It literally takes 3 years to build a factory. Now, in that time, you got to hire electricians, plumbers, construction workers, all building permits, all that stuff you got to do. But it's not the same as I have 6,000 people working in jobs with 401ks and healthcare. And I'm supporting
that doesn't
the
come until
economy.
Later if it comes.
Correct. Yeah. And so, we can talk about all these investments and stuff, but the time from investment to the final kind of
success story.
Yeah, is a while.
Yeah.
And I think they're doing the right thing. They are trying to be reasonable about cutting spending. They are trying to make the U.S. more resilient and more self-sufficient. And to actually accomplish those goals, you need to exert some pain onto the market.
Yeah, that's
and
what we're seeing.
There's no way around it.
Well, all right, we'll keep watching. My friend Beimnet Abebe from Galaxy Trading. Thank you so much. Let's go now to our guest, Arjun Sethi, co-CEO of Kraken and chairman at Tribe Capital. Arjun, thank you so much for coming on Galaxy Brains.
Thanks for having me.
it has been a fascinating year, obviously, and even 6 months. Kraken, one of the largest crypto exchanges in the world and oldest as well. Tell me about Kraken, just at a high level, Arjun, and you joining as co-CEO.
Yeah, so I think the best way to sort of think about Kraken is there are two co-founders, Jesse and Thorn, that started the company, and they were extremely capital efficient. They built the company to think about security first, because this came out of the incident between Mt. Gox, where Jesse, our co-founder, was actually asked to go help essentially understand what had happened and sort of fix some of the issues. And through that, what I'd say sort of maybe a brilliance of understanding what the real issues were, is that he decided to build out his own exchange. So security, sort of fair, an order book and liquidity that would make sense for everyone, not just for like professional traders and high frequency traders, but anyone who wanted to trade on the platform. And so that's where it came from. And a lot of it was just a thought of where the friction was in virtual goods and virtual currencies. And so just the movement from gaming and virtual currencies and goods to crypto was pretty synonymous and pretty natural for the company. So fast forward, 5, 10, 15 years, the company raised less than 25 million. They continued to use their profit to build more products. And I think what's really important is that the actual exchange was a part of enabling new products that they wanted to build. And that's always been a part of the ethos of the company. Some of those worked really well. Some of those were sort of unsuccessful attempts. But the goal was that you'd have multiple shots on goal to be able to build great products. So today, we've got a dozen partners that use our API, a dozen or so partners that use our APIs for their own experience. We have our order book and exchange. We've got like some of the largest depth of liquidity in Europe and in the United States, probably second to Binance in the world. And we work with multiple companies that partner with us because we're an exchange, not just an interface. And then because of that, we also have our consumer trade, so for the prosumers, and then we have our professional trader, I'd say instrumentation or experience that they use in order to trade crypto and other assets today. And what's really great is that a professional trader is what we've been sort of core to for such a very long time. We cater to them all over the world in over 180 geographies. And what's great is that a professional trader thinks, acts, looks the same no matter where they are worldwide. And that's very different from a consumer looking to get into crypto, which is what you'd see with the traditional exchanges versus what you see with custody and like high frequency exchanges. Is that like we actually sit, I don't want to say in the middle, but we sit with a very core constituent that really matters to what we do.
Yeah, I think you've been around a long time. It doesn't surprise. I've seen those products be built. I wanted to ask you about some of those. One that's really interesting that I know Coinbase is, well known for now, which is their Base L2, Ethereum based Base L2. It's called Base. It's annoying. You guys are launching an L2. Is that right?
We helped launch an L2 called the Inc. Foundation.
And like, how does that interplay? Like, I've still not really understood exactly how the Coinbase and their base actually like makes sense with, a roll up with one sequencer. Like, is it extensive to Kraken? Is it like there's other stuff we can do? We can bring DeFi into our environment. Is it a tokenization play? Like, what is sort of the idea behind it?
I think if you take a step back, what is the promise of DeFi? The promise of DeFi is that you have access to a future that's not evenly distributed for the average customer, no matter who they might be. And so if you think about what we're trying to do, we're trying to bridge the gap between traditional finance. We built a centralized exchange, so centralized finance in crypto. And we want to continue to build not just a layer 2 where other people can build, but we're going to build our own applications on top of it to help bridge the gap between what we think our core constituent of customers need and what other folks may need. And so we want to be able to build a healthy ecosystem where it's not us just being the only company to be able to build a product. I'd make it akin to thinking about Android and Apple, which is we want to be able to have a developer ecosystem that can like very, very be very, very successful in the applications they build on our layer 2 and however that emerges over time. But at the same time, we can partner with them and bridge the gap between what our customers want and what they have the ability for, no matter what the customer segmentation looks like. So if you're a large institution, we're going to have vertically integrated apps for you. If you're a middle professional trader, we have vertically integrated apps that we can bridge the gap on. And I think the premise is going to be that we can continue to have shots on goal, because this market will just continue to evolve. It's so early, where we're talking about a very small segment of the population. It's grown very quickly, but we're talking about bringing on billions of people into DeFi products. But the DeFi products, at the end of the day, we shouldn't have to use the word DeFi, right? We're able to use a certain set of protocols in that instrumentation setting to be able to bring the best in class products to whomever they may be, wherever they may be located worldwide.
Yeah, I think it makes a lot of sense. One of the other products that you guys were very early with was staking for your exchange users, and you encountered, I don't know what we call it, an onslaught from the prior Securities and Exchange Commission. I don't know if you can say anything about what that experience was like then, but maybe contrast it to what you're seeing now and what you guys, Kraken, are hearing now in Washington.
So to take a step back on my particular history, I was an early shareholder, independent board member, and then Tribe Capital has invested, a very significant portion of its AUM into Kraken itself. So we're fairly concentrated. So we've all kind of been through the thick of it. But I was with the company going through the two versions of the SEC. One was kind of neutral, and then what we saw with the last administration, where they were much more enforcement oriented. And I think the right way to sort of think through what we went through is, okay, great. Well, still, what's the most important thing that we need to do to serve our clients? What's the most important thing to make sure that we can continue to secure our clients, and what's the most important thing to make sure that we can help grow them at the end of the day? And so part of that was making sure that we were compliant. We were first and best in class to do that, and being licensed in almost all the regions. And I think what you've seen in the US is kind of this barbell around. They were just trying to figure out what crypto was and what was the application. So we always got feedback, which is probably similar to how you think about the late 90s, is like, what is the internet? It's probably just used for nefarious activities and drugs. And so if you look at the past newspapers of the 90s, in fact, if you go back to 150 years, electricity was thought of the same way, which is people are only going to stay up late to do the nefarious activities, and it looks really ugly in front of a building. So I think technology has always been sort of this protagonist, and there's a back and forth depending on what revolution we're looking at. And if you take a look at what crypto has done, it's such a massive paradigm shift, especially on the infrastructure side, that the people that I would say hate it the most, or are the most scared of it, are your traditional brick and mortar post-World War II banks and any financial services that are out there. So they're okay with fintech because there was a veneer layer on top, but they still had to use the banks and financial services in the back end. Now you've got crypto, not just in one region, but worldwide, that makes it scary. So you got the Elizabeth Warrens of the world that come from a traditional banking background that sort of like weaponize and say that this is actually bad for the consumer. But if you really take a look at it, what is it that we're doing? And I use this term and adage really often, is that like the future is already here. It's just not evenly distributed, and we want to be able to evenly distribute it. And so I think what you see between the sea change of the SEC in the past and what they're thinking about now is that there's a large recognition that this is good for the consumer. This is good for consumer protection. This is good for investors, good for investor protection, because you can use this technology to be able to enable what the rules of the road are already and what they could be in the future.
Yeah, I think that makes sense. And you've encountered a different reality in Washington. I mean, I know we have, and I've written a lot about this, but maybe as an operator and a CEO, like, you could share a little bit of your experience in the shift since, January 20th.
Look, prior to the current administration and the current regulatory environment, I think getting a meeting with the SEC was near impossible. You would meet a very small select set of people that were, pro innovation is maybe the right word to think about it. And today, I think between the president-elect to becoming the president to where we are today, myself and members of my team, met with the SEC and the other regulatory bodies, including the CFTC, dozens of times, not just within SEC headquarters, but also outside, where we are on the same panels. We're talking through what we can do together and how the industry should move forward. And I think that's really exciting that we're able to think about what can happen in the future, how to move forward versus complaining about the past.
Mm-hmm. Yeah, I think some of the interesting things I've seen, I've been a close watcher of Hester Peirce for a long time. And I've really loved her writing over the years. She's written or in verbal, given speeches, something like 500 statements since she joined as a commissioner in 2018, I think it was. And one of the favorite things to think about is the two that she's published, the two statements this year. Were the first one, February 4th, was called "The Journey Begins," and it's a giant catalog of how complicated the mess that has been left with the SEC by the prior administration's SEC's refusal to actually do work on how to deal with crypto and the existing regulations. And then I think maybe it was the 26th or so, like about, later in that month of February, she published one, "There Must Be Some Way Out of Here," right? Which is like, it's kind of like, the beginning of the month when she takes, when the SEC changes hands, she starts doing an accounting of what are all the issues we got to fix. And then once she's discovered them and she put out a list of like 40 plus things, it's kind of like, I think of her as like in the Raiders of the Lost Ark in the giant warehouse with all the boxes, like, oh crap, like there's a lot of boxes under there. Have you, and I assume, I know our policy folks are sort of loving this moment of getting to work with the government and the regulators to try to define what the future of digital assets in America looks like. Like, does it feel like not only is the door open, but like we're, on the precipice of some grand adoption because of it?
Look, I think what's the job of the U.S. government is to get out of the way of people's lives and businesses and to be free to be able to communicate, enable in commerce and transact. I think like that's like the precipice of why I think it's great to be an American and why my parents came here as well. Like that's just so embedded and in our minds versus like where we came from, which might have been socialistic, et cetera. And so I think it's very dangerous, this pendulum swing where we say, oh, great, the government can work with us now, we should always continue to talk to them. I think the way to sort of look at what she's written, what she's said, what acting chairman Uyeda has said, and hopefully the next set of folks, is that their base goal is to make sure that a company like ours, Kraken, that's based here in the U.S., regulated here in the U.S., can build the best products, continue to build trust as a currency with our customers all over the world, no matter who they are. And we have a base set of rules that we know how to adhere to, and that we can and we can grow with. And so we want to be competitive. We want to have a level playing field. We want to know who our competitive set is. We want to make sure we can build the best products. And I think what I'm more excited about actually isn't the back and forth with Washington, but Washington setting up, the base set of rules, including the stablecoin legislation, the market structure bill, because it helps enable us just build best in class products. We should be talking the majority of our time, including something like this, which is like, what are the types of products that customers are going to be wanting to use and getting really excited about? And so that's what I'm really excited about Washington helping to enable, rather than us having to go back and forth. And so the last administration was about defending, and this administration, my hope is that it's more about enabling us to be able to just walk freely.
Yeah, I mean, one of the points you make, I think, that is very well taken is we don't want this pendulum to swing back and forth forever. Like, if let's say we get some regulatory relief, but we don't get it something more durable like federal law, then, someone who hates crypto or hates Bitcoin could come in the next administration and change everything back the way it went. So I think this is a huge impetus behind these legislations that are being proposed, the stablecoin legislation, whether it's the Genius Act or the Stable Act, right, in the House. And then this idea of market structure, who should regulate, and try to encode and make permanent that distinction in federal law. These are things people are working on in Washington. I think the stablecoin bill in the Senate is quite far along, hasn't had a yay or nay vote yet, but I think came out of committee with 5 Democrats joining all the Republicans on that committee to vote for it. Do you guys have a view on these bills in particular, or generally speaking? Like, is that a big priority for Kraken to get that type of codified clarity?
We do. And we're supportive of, first and foremost, a level playing field. And so we want to be able to make sure that as an exchange, we have the ability to work with one regulator. I think the dual structure mandate that we've seen post Dodd-Frank doesn't work. I think the way in which it's been thought about now probably won't work. And I think people are coming to the same conclusion. So we're kind of excited about everyone rowing in the same direction. And which is the market structure bill. And then the stablecoin bill, I think there are 2 to 3 pieces in there that I think are really important. One is, how do you just make sure that clients believe that their assets can be custodied safely and they can move their money? So liquidity ends up being a really big part of that. And it also, this is a network effect business in some cases, which is you're going to want to use a stablecoin that's most likely USD denominated backed. And you don't want to have to think, just like you don't think about your cash or your money that you send, that there might be volatility in that. And I think that's really important because that's what makes the market stable. And again, for you to be able to build best in class products. So we're pretty neutral there. We're not an issuer. We don't have any specific deal where we're taking the majority of the economics of another stablecoin. I think for us, it's that may the best stablecoin win on behalf of the customer to make sure that we can make the best products in their local region. And that's the way in which we think about it, and that's what we've promoted.
Do you buy this idea that stablecoins can be this giant tool for, if widely adopted, if codified in law, if banks can issue them, which is effectively the Genius Act's sort of thrust in the Senate, this idea, do you buy it that, it can create decades more of dollar dominance, that it can be super supportive for the national debt, right? Because they have to hold treasuries. Even Treasury Secretary Scott Bessent has said almost, I think explicitly, that one of the ways we will solidify the dollar is through stablecoins. Is that an interesting part of this to you, or is it more just about on-chain usage?
It's pretty synonymous. And I think what's important is that, so from a U.S. perspective, it's really important, right, to create stability in the markets. We do this through so many different mechanisms, from market to military. The stablecoin, I think, ends up being part of a national security conversation as well as market stability conversation. So you take those 2 pieces together and say, okay, great, how do we make sure we can enable that? Well, having the companies and the issuers being in line or in alignment with making sure they're buying and focusing on U.S. Treasuries, I think is priority number 1. I would 100% agree that should be the case. Now the question ends up being, how do you start thinking about FX between one stablecoin and another stablecoin for another region and the local currencies and how they interact? These are all pieces that I think are not complicated, but you have to sort of think about traditional finance and traditional markets and how do customers interact there. I think I go back to the same thing again, which is, there's a large set of products that we want to be able to help enable in the emerging markets, the emerged markets, and the continuing developing markets. When I say developing markets, I think of US as a developing market, not like we're finished. And so what are the products that we need? We need to make sure that we have market stability, we have stable coins, and we have the ability to trust that this system works so that we can continue to enable it. It's great for the US because the more you're able to enable innovation, especially around stablecoins, and have anyone, especially when they think about customer segmentation, from Fidelity to Tether to Circle to USD One now, whoever their customers might be, if they have a mechanism to make sure that their product is stable on behalf of their customers, they can enable folks like us and other folks around the table to build best-in-class products. So I think one of the friction points of us being able to build best-in-class products is non-market stability. Once we have that, I think we're off to the races where the paradigm shift happens again in crypto when we've seen so many arcs.
Yeah, I think that's well said. Here's maybe a little bit more philosophical question, and I draw a little bit from Jesse Powell's, well-known early Bitcoiner, right? One of the co-founders of Kraken. Questions about, and I hear this, I get asked this myself, and I've got some nuance to my answer, but I'd love if you have one to share it. When I sort of first got into working on Bitcoin full-time at Fidelity in 15, 16, and 17, there was this sort of idea among institutions that the blockchain was really promising and cool, but Bitcoin, that was for criminals, and that it was this dark web money, right? Partly because of the Silk Road fallout and of course the Mt. Gox hack and collapse. And so there was this mantra, blockchain, not Bitcoin, was what a lot of the suits at the time thought. Now, most of those ideas that emanated from that mantra amounted to nothing. And enterprise blockchain, permissioned blockchain was sort of the foundation of that idea. But it kind of feels now that there is a bit of a stablecoins, not Bitcoin sort of
I think so. If you go back to our core culture of how we started, I think Jesse and Ton did a great job of thinking about crypto is and should be for everyone. So you go back to the Bitcoin white paper, and I know this might just seem like a history lesson. What is it? It's borderless. It's supposed to be global. It's supposed to be digital money. The nodes are leaderless. There's not supposed to be anyone. You can call it the immaculate conception theory, but it maintains a monetary and cryptographic soundness. Like that at its core should be and always be thought of like the culture of what we're trying to build off of. And so I know there's this back and forth, which is that stable coins and the proof of stake versus proof of work, et cetera. But I think what's really important is that Bitcoin has helped enable politics out of money. And now some of these other asset classes that are coming, similar to how you think about traditional finance, is that there will be always politics, but politics are being involved in other aspects. But it's still based off of the core tenet, which is Bitcoin. So I wouldn't call myself a Bitcoin maximalist, but I think it's really important to think of whatever Bitcoin may look like today. People talk of it as a store of value. It's helping to enable a borderless global digital money in a way where permissionless and borderless innovation can start happening. I think like that's the key piece there. And so when you start thinking about global adoption of products, who's involved and who isn't, of course, there's going to be the friction of geography, but it's come down so much further over the last 10 years. And if you go back even 30 years, when you just the idea of the internet and what programmable capital or money could look like, we're already there. And so I think what I get really excited about is that like this is the first time in history where you have a government now getting involved to say we promote this, we want to enable this, and we want to remove politics out of money as much as possible.
Yeah, they are saying that with the debanking stuff, with their interest in crypto, and with that executive order that President Trump signed, I think now like 3 or 4 Thursdays ago in early March, establishing a strategic Bitcoin reserve and a United States digital asset stockpile. That is the name of the executive order. And it mandates that the U.S. Treasury Department hold all the Bitcoin that it is legally allowed to and never sell it, and also explore opportunities to find budget neutral ways to acquire more. Interestingly, it kind of does the reverse for the rest of the coins. It says, get them all. You're prohibited from acquiring more, but maybe hold them, put them in a stockpile, and let Treasury manage that. You were in Washington for the Bitcoin Policy Institute's roundtable on, shortly after the next week after that EO was signed. I was there as well. I was stunned by the, attendance of, multiple U.S. senators, Bo Hines, a slew of important Bitcoin related executives, including yourself, talking about how to implement that. What do you think about the strategic reserve as a concept at a high level? Is it right for Bitcoiners to hope that the nation state acquires Bitcoin? Will they? How much? Is there a way to do it? Like, what are your thoughts on that, on the reserve?
I'm going to go back to my previous statement. Taking politics out of money, it becomes a nonpartisan issue if we continue to acquire and store Bitcoin, right? And it's not too different than how people think about gold reserves. We want to have Bitcoin. It's a national security imperative. It helps enable innovation. It continues permissionless and borderless innovation. We should be the number one country to do it. We should have the number one innovators and founders and companies to be able to be enabled by it. The best way to do it is to be able to say, like, we're a country that's going to back this system of thinking. And so all of the conversations that you've seen there have been around that, from the White House to both sides of the House and the Senate in Washington, is thinking through what that actually means. And I think what people may be focused on too much is that we're going to have a strategic Bitcoin reserve. Woohoo. It's more that Bitcoin and blockchain and the crypto ecosystem are just going to be that much more enabled. And what are the types of products and services now that even banks are going to be forced to try to figure out how to innovate on? Other nation states are going to be they'll be forced to figure out how to innovate on top of, right? You're seeing UAE, some member states of Europe, states within the United States saying that we need to do the same thing. The next is going to be, great, well, now I understand permissionless and borderless money and a strategic Bitcoin reserve. What are other things that I can do with it? So tokenized securities, tokenized commodities, utilities, like what do these things all mean? This is not a conversation that we've had in the past because we were always just defending the technology. Now we're at a place where we can sort of augment and say, what is it that we can do with the technology on behalf of everyday citizens and customers and clients worldwide? I think that's the part that's just, to me, really exciting, super fucking cool. And it's one of the reasons why I just said, I got to go all in into figuring out this paradigm shift.
Yeah, the tokenization is I'm happy you mentioned this because, this has sort of been a long time swan song or holy grail, always sought for, never really achieved. Stablecoins have achieved it, and they are tokenization. Do you think we'll see tokenized?
Well, the stablecoins help enable liquidity. They help enable markets.
Well, they're a prerequisite.
Yeah, that's right. So yeah, I think we will see it. I think we will see it not within years, but I think we'll see it within weeks and months that these companies are going to be able to help enable real world asset, tokenized securities, tokenized commodities, also just giving access to those types of products that people typically didn't have access to because of financial privilege. Will be able to just give people better access to better products with better spreads for the customers, not on behalf of the intermediaries.
Yeah, that makes a lot of sense. I'm looking for tokenized U.S. listed equities. That's what I would love to see. I want to trade, the S&P 500 on chain one day. I think would be a huge win for blockchains and for traditional equities and investors.
That's not an if, it's when. Like, it's going to happen, which is, that's what's so exciting. And the same way in which you think about stablecoins and USD denominated products worldwide that people are building off of, imagine what you're able to do with it when you have tokenized equities or tokenized S&P 500 worldwide, where people have access to U.S. markets, U.S. innovation, and the way in which we think about building innovation around it.
What do you think about venture going forward? I know you've been a venture investor, a long time. I think, I don't know, Kraken for sure has done some venture investing. I want to ask about, some acquisitions you guys have done, but crypto VC hasn't really come back with this market. Granted, all VC has been under pressure with, high rates and some cyclicality and some other things, but are you seeing a lot of new exciting ideas and founders out there and funds willing to invest in them?
Taking a step back, so co-CEO of Kraken, also chairman at Tribe Capital, and the formation of Tribe Capital was actually built off of the understanding of what's happening now quantitatively, like what has product market fit for a customer set, no matter what they're building and no matter where they're from. And to be able to benchmark a product that works versus products that don't. And so we can spend time and concentrate on what we're seeing like working. What you've seen in what you've seen in the overall financial market since what I'd call 2010 to 2022 was obviously an inflation of assets and a ton of capital going into alternative assets, in some cases risk assets. And it's not just in the U.S. It spurred a lot of that supply and demand of capital going into China, Europe, India, investable Asia, Latin America, USA. When I say investable Asia, I mean like as a U.S. capital allocator, a decipher between China and investable Asia. And so we had this huge supply of capital going into assets, risky assets in some cases too. So when you take a look at venture crypto or really early crypto, I think that there's two pieces to this. Venture crypto is going off of the traditional way of investing into venture capital, which is that the accrual of value happens through equity, and you're building off of a company that's thinking about cash flow and intrinsic value that may be listed one day or valued in that way. It's very different than how you think about tokenization. It's very different than how you think about building a utility token. It's very different than what we're speaking to here. It's not completely different. There's bridges there, and what you've seen was that I would just say, the fear of missing out. Like you would hear of these stories of speculation, like a gold rush, and then you had an onslaught of capital. I truly think that majority of venture capitalists, no matter what the technology paradigm shift looks like, they just actually don't know what it is. And so they'll hear a story, they'll like the story, and then they just kind of deploy the capital. I think they've been burned through many, many cycles, and maybe finally understanding that they don't actually know what crypto means, what is the technology it helps enable, who are the customer sets. And so that's slowly starting to change when they think about infrastructure as a part of that stack, when they think about products and services as a part of that stack, and where do they want to play. And I think it's really great that when you think about worldwide innovation, you don't really, and especially with crypto, you don't really need the privilege of venture capital to be able to start a protocol, get people up and running, and start a value proposition on behalf of your customers. I think the best of what crypto enables today and exacts today is kind of what the US looked like between the 80s and the 2000s, which is I can get something up and running. If I had an idea, even as a small to medium business, I just had the ability to try to innovate. And I think this is what's the most exciting, and it should be for VC crypto as well. It just means there's that many more people willing to build and innovate, not just here, but worldwide. And we can bring them here, the best and brightest, and focus on building this product. So I think VC crypto, if you just take a look at the supply and demand of capital going into fintech and crypto, is still at an all-time low over the last 20 years.
Yeah, that makes sense. And I got some more rapid fire questions here before we wrap, Arjun. You guys, Kraken has entered into agreement or has acquired, I don't know the exact stage of the deal, but has acquired NinjaTrader, a big retail U.S. futures trading platform. We're talking about stock futures, correct? That's not a crypto firm. What's the story there?
So I'll go back to what I said earlier. I want to make sure that myself, the founding vision of what Kraken was, what it can enable for everyone worldwide through crypto, through its technology, through our exchange, through our liquidity, to be able to bridge the gap between traditional finance products and then what we see all the way in DeFi. And I think that's our job, and that's what we're going to be the stewards of. And so NinjaTrader just helps enable us to be able to do that at a faster rate. They were already doing that here in the US with futures and derivatives. They're one of the largest partners with CME for retail. And I think when we want to, when we think about what are all of the products and services and family of products is what we call it internally, this is just another part of what we think we can help enable. Not just, hey, Kraken can do more in the United States, but it's more about NinjaTraders and its customers. What are they going to now be able to have access to that they didn't have before as a part of DeFi? What are the new contracts and products and suites that they get access to through their interface, through their workflow that they didn't get access to? And I think what I'm really excited about is, again, bridging that gap between what maybe a penny stock trader or a commodity traders or stock trader was thinking about when it came to crypto and what they can get access to now. And so NinjaTrader is just another product in our family of products that we're going to help to bridge the gap between what we believe crypto will allow us to do, to be able to build best-in-class products for every single segmentation of the customer sets that we have today.
I wanted to call out Kraken positively for two other really interesting and early innovations that the exchange did. One was supporting Bitcoin's Lightning Network in 2021. At the time, I know Pierre Rochard and Evan Kalutis did a lot of work there, as well as I'm sure many others, to enable Lightning. It was very early for an exchange or any kind of really institution at all to enable Lightning. Like, is that, do you know if Kraken has designs on other Bitcoin innovations? This Bitcoin L2 investing meta is very popular. Like, might Kraken get interested and be early on those if one of them becomes popular?
I'm going to go back to the core. If you go to our Kraken culture docs, there's something that we had said is like crypto is to money what the internet is to information. So we're going to do everything possible to make sure that if there's an innovative product, if there's a way in which value can be accrued on behalf of the customer, we'll be there. So Jesse, our co-founder, was really early on this. He was very focused on making sure that that could happen. And so staying true to making sure that we can recognize that early, instrument it early, and enable and support it early, we'll always want to do it to the best of our ability.
Another thing you guys did early that is a I actually think could end up becoming one of the key actual use cases of public blockchains is the proof of reserves. Kraken does it, I think, biannually and has been doing publishing cryptographic-based proof of reserves for quite a while, long before it became sort of, I don't want to say popular, but needed and popular, following some high-profile exchange blowups. Kraken was doing it a long time before. How important is it to you and that Kraken be this transparent? And what about my thesis at the top of the question about maybe this is like a core actual feature of crypto that the rest of the world could benefit from?
The core is transparency. So how do you help enable that? How do you stay true to it? And how do you make sure you have a culture that is able to do that internally and externally? How do we make sure that that is the adage we use for all of our clients today? So we internally have this talk about Kraken transparency and what should we be able to do. So proof of reserves is one of the first. We do that. We want to continue to enable that. We want to be able to be much more transparent with it, because at the end of the day, the only currency that we have with our customers and our clients is trust. And so how do we enable that, and what do we do? And so part of that also was just sharing our financials, our funded accounts, just like you'd see in a public company. But I think more so, we want to be able to share all aspects of the types of products that we have, what we may or may not custody, and more importantly, because we are able to do this, we're able to do this in a secure way. Security ends up being also our number one focus, to be able to be transparent why people want to work with us, who is the counterparty, and that you don't have to worry about counterparty risk as much with us, because we're going to be transparent around what that money looks like, where it's deposited, how it's custodied, what are the proof of reserves on behalf of a customer. And I think that's really important, which is when I go and work with any, let's call it exchange, I just want to know that what's there is mine, and I want to know that it's being handled with care. And that trust mechanism, I think, is is paramount, and it's number one. And so our vision has been since day one, and what I think it'll continue to be, and what I'll continue to push for, is to make sure that the premise of what crypto is a part of our overall DNA as well, on behalf of our clients.
You mentioned something about releasing financials. I've got to ask, does Kraken have designs on the public markets for itself?
To what I said earlier, our number one focus is our clients and making sure that they feel great about the products that they use. The way in which to think about it is, we want to make sure that we're transparent in the same way public markets companies are transparent in terms of counterparty. And if it helps enable us to be public and enable us to continue to gain more customers and continue to retain our customers, we will think about it. So part of our mandate of being transparent is the ability to turn on the light if we needed to go public. So I wouldn't say that is our goal. It's just another step along the journey for us to be able to make sure that we can serve our clients.
Well, it has been a long journey, and I know you've served a lot of clients, Arjun. Before we wrap, is there, something in particular, specific, that gets you really excited about the rest of this year?
What I'm really excited about, and what I come from a consumer background. I built games, virtual goods, virtual currencies, and I always wanted to find a way in which to build these products that are whimsical in some cases. And I think in traditional finance and in financial products, you don't really think about building whimsical products. You just think of it as just a pure utility, and who cares about it? Maybe you get a little bit of flashy, nice UI, veneer designs. But I think for the first time, what we can really do is get people excited about using their financial products, excited about being able to have upward mobility in the assets that they're using, probably put a smile on their face while they're using financial products. And so when you think about Kraken's vision of what it is that, yes, we're an exchange. Yes, we have partners. Yes, we have traders. But what it enables us to do is to be able to build best-in-class products today and moving forward that you traditionally wouldn't think of exchanges building because they're so bifurcated in the traditional markets. And so today people think of us as interactive brokers type of product, but growing at the speed of NASDAQ. But I think tomorrow what you'll look at us is very similar to what you've seen with the likes of Google or Facebook, where they use their profits to continue to build best-in-class products that are much more evenly distributed for a larger audience. And so I think this year and next year, it should be really exciting to see what we put out.
I agree. Well, thank you so much for coming on Galaxy Brains, Arjun Sethi, chairman of Tribe Capital and co-CEO of Kraken. Thanks so much.
Thanks for having me.
That's it for this week's episode of Galaxy Brains. Thanks to our guest, Arjun Sethi, general partner at Tribe Capital and co-CEO of Kraken Exchange, and our friend Beimnet Abebe from Galaxy Trading. As always, everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXYResearch. See you next week.